Good afternoon, boys and girls. It's Thursday, one day after the FOMC meeting. Unfortunately, I wasn't able to live stream it yesterday because I had another German live stream, but today we can discuss what happened yesterday and what will probably happen in the next trading days. So we will have initial jobless claims like every Thursday in about 10 minutes. Let's see if this can move the market. The ADP numbers from yesterday were not really moving the market, but this was because of the FOMC meeting later. And tomorrow we will have non-farm payrolls. This for sure will move the market, and therefore the job numbers are important this week. Let's start with Nasdaq. So it's dipping right now. We are below the closing of yesterday, which was right around 13,100 points. And we are at 13,067 points right now for June future here. What happened yesterday? So when the interest rate decision was announced, the market went up for about 30 to 45 minutes. Then we had a high point here at 13,310 points. And when the press conference began, the market went down again and closed at day lows here, 13,100 points. After hours, we went to lower levels again because of some fears from the banking sector, especially Western Bancorp, dipped about 50%. And you see here the Asian session began lower with lows of 13,043 points. So this should be the next smaller support level here, the lows from tonight here. And yeah, the same for other commodities. So if we go through crude oil, for example, there we see we dipped through the previous low points from March 19th. So low point tonight was $63.64. But you see, this is the third consecutive day we made lower lows here. Yesterday we closed at 68.60. This was a 4% or 4.4% negative day. And if I go on a 15-minute time frame, we see tonight after this 1 hour trading pause, we reopened and then went lower immediately and made lows here at $63.64. And then we closed this, it wasn't a real gap, but you see this big push to the downside was bought immediately, and we are back at the $69 level. So luckily, because I opened a $53 strike short put, so I will profit if there is a bounce back here. So I didn't see it coming that we will see the lows again here this fast, but yeah, it happened, and now I can sit and wait here for this reversal to come. My minimum target would be 72, better would be $74. And then I would short it again. But the implied volatility is pretty good here right now, and therefore I opened a 53 strike in July expiration with 80 cents of premium. Let's see if this is a good trade or if it was too early again, like we have seen here. So what else is interesting? Natural gas, of course, is interesting. Where's my chart? Too many open charts here. So natural gas dipped below the previous lows here and made lows of $2.10 yesterday. We are a little bit higher today, but of course we can still retest the $2 or even lower 180. So it will be interesting. The previous low here from June future was $2.14, so we went to lower levels, but May future made lows at, I think it was $1.97, something like this. So we already were at lower levels with the May future, and the June future made new lows here yesterday. So no position right now, still waiting for a bottom to be found, and then I would re-enter a long trade here. I closed the short calls in sugar. We talked about this, and the prices are just going sideways. So it was a nice profit, 55% with the 30 strike short calls. I could close yesterday pre-market, and yeah, I'm just watching the chart if it's dipping further, then I would take on a short future trade here on sugar. Interesting was wheat yesterday. The wheat prices went higher by more than 4%. So here we see this bounce back from the 600 cent area. The low point was 603 and 3/4, and from there we went higher more than 5.75% from the lows. So we closed here at 640. Yeah, we made higher levels today, but are selling off a little bit today, 1% lower. But yeah, it's still a pretty good rejection here from the lows. So let's see it on hourly time frame. So let's see if we can go to higher levels again. I still have my 700 strike long call and a 585 strike short put here. So it's looking a lot better than it was yesterday when we had the live stream. And we have German DAX here. German DAX is selling off this week. So yesterday and the day before yesterday, you see we went back from the 16,000 area to lower levels, and finally we can go below the previous low points. So we are leaving this sideways trading phase. Let's see if we can close at lower levels, and this could be the first interesting day for shorties here if we close outside of the sideways trading range here. Especially interesting is gold. Yes, gold was crazy, especially tonight with the fear from the banking sector. We made new highs. You can see here after the trading halt there was the same with crude oil, and here you see the other direction with gold. Gold made highs at $2,085 with June future here. So we went above the previous high point. You can see the previous high point here, $2,063 from April 13th, and now we went to higher levels, but it was already sold off. So yeah, the fear went out again. I don't believe that this will stay for a long time, so probably the fear will come back into the market with the banking sector. So maybe we will see a rise to 2,100, but I still believe that this will not last for long, because if the recession is coming, then gold will dip, and it will dip hard. So I would rather position into a short trade when we see a further rise back to $2,100 and sell some calls, because implied volatility is pretty good for gold right now. So I would prepare to sell some calls here and profit from the high implied volatility in the options, because normally gold is not rising into a recession. Look at the prices, what happened back in 2008, and there the gold prices dipped about 40%. So therefore I wouldn't stay in a long position during an incoming recession. Yeah, 1 minute for the news. So let's see what will happen on initial jobless claims here. Today the expectation is here 240k, and the previous number was 230k. So let's see if the market reacts on initial jobless claims today. Let's see it on a 1 minute time frame here. News are out in about 30 seconds. So let's see this, and we have more news: trade balance, unit labor costs, non-farm productivity, import exports. So yeah, a lot of numbers which can be important for the next Federal Reserve meetings. Trade balance negative, more negative than expected, and non-farm productivity is going down. So a slowdown here. Jobless claims higher than expected, the 4 weeks average, and initial jobless claims as well higher than expected, 242k. So more signs of an incoming recession, higher numbers than in the previous week and higher numbers than expected. Continuing jobless claims a little bit lower than expected, but of course less fear of inflation and less fear of higher interest rate levels. Therefore the market is rising a little bit or just staying stable. But I would say in the long run here the prices should dip, because these are clear signs of, or more signs of, the recession. Labor costs, look here, labor costs still too high, 6.3% instead of 5.5%. So the inflation is still there, and it's a good sign for a stagflation. So stagnation of the economy and still high inflation. This is the worst what can happen. So still high inflation. So the Federal Reserve has to set high interest rates, but with the recession they normally should go to lower interest rate levels, but they cannot because of the high inflation, and this is stagflation, and this is probably what we will get into in the next month. So let's see what the interest rate expectations are for the next Federal Reserve meeting in 41 days. And you see 92% are expecting to stay here at 5.25%, like we have seen in the previous live streams. Almost no one is expecting a further rate hike here. 96% are expecting to stay there, and 4% are expecting a rate cut here back to 5%. Let's see the probabilities. So even if Jerome Powell said yesterday that there won't be a cut if the inflation will stay high, so he made no sign at all for lower interest rates, the market is still expecting this. And look here, the first rate cut is expected to happen here in September and end the year here at 4.5%. So 75 basis points lower than the current interest rate level. This is not what Jerome Powell was communicating. And the market is still expecting this, even after the FOMC session yesterday. So there's a big discrepancy between what Jerome Powell said and what the market is expecting. And the market still believes that it is not wrong. So this will be really interesting in the next Federal Reserve meetings here, with the new economic data, if we come into a recession, but if the inflation will stay high, what the Federal Reserve will do in a stagflation. Yeah, so there was no real interesting thing yesterday. 25 basis points like expected. The market expected this with more than 90% probability, but yeah, so no special news from the press conference, because Jerome Powell was, like always, he was just giving the market what it wanted to, but was not saying anything about lower interest rate levels. And this is what the market is still expecting here. Okay, so I still believe that the market will retest the lows. Next level is 13,000, and then the previous low points from April 25th. And if we go below these levels, then there will be more sell-off here. We still have a little bit of time to retest the previous low points here. There's no big fear in the market right now if we look at the VIX index. So here we see a little bit of a rise to 19.75. So this is unusual, because normally after the FOMC session there's less fear, because now all the information is in the market. But here you see a rise in fear. And why? Because the people don't know what will happen if the inflation will stay high and the interest rate levels will stay high, but we will get into a recession. So this is fear coming up, especially for the banking sector here. They have to struggle with the high interest rate levels, because there's an outflow of deposits from the banks, especially the smaller banks and the medium banks. The big banks don't have problems, but the smaller ones do have. And yeah, there's an inflow into money market funds. So the banks are losing deposits, and they have to pay high interest rate levels to attract more depositors to open accounts and to give them their money to work with. And this is a big issue for them, especially if the market is in fear and a lot of depositors want their money back and transfer it to bigger banks. So we see a rise in fear. It's not a big rise, but you see the third consecutive day, and we are trying to push back above the 20. So I'm expecting the next week to be above 20 here. So I'm still in my long VIX position here, which will profit from more fear in the market. So let's see some more stocks I have positions in. Let's look at Nvidia first. So I'm in a long put position with a 230 strike put. Yesterday Nvidia went to lower levels but closed almost unchanged from the opening, but still lower. So let's see if we can finally go back below the previous high points here and retest the previous lows. No real sign of weakness, but you can clearly see that this high point was sold off, and this is a pretty good sign here, because I entered with some more puts here at the 290 strike, at the $290 level with the 230 strike put. The same for Tesla. Here I entered with more long puts on the previous Friday when we went back to $165. For now it's just going sideways, but the implied volatility is already rising here. So I have 145 strike puts, long puts, and I'm still targeting here to close this previous gap in Tesla. Yeah, you see I'm really short positioned overall, because I believe in the next weeks we will see more signs of this recession and stagflation, and this will bring the market overall to lower levels. Euro US dollar, wow, this is really good here. So fear is coming in. Remember, the US dollar is a leading indicator for the market. So if fear is coming up, money is flowing back into US dollar cash. And look at this. This is what we see after the news here. So there is a big inflow into US dollar cash. So look what happened yesterday in the previous trading sessions here. When the interest rate decision was made, we went to higher levels here, 110.90. So this is the third or even fourth consecutive time we are failing at this level here. So I reopened a short. I talked about this in a live stream yesterday at 110.75. I opened the short yesterday. So I'm profiting from a downfall here in Euro US dollar, from a stronger US dollar and a weaker Euro. And this is what is happening right now, because the interest rate decision from the European Central Bank was made. So you can see here ECB rate, and yeah, it stays there at 3.25% the deposit rate, and the lending rate is at 4%. So it went up from 3.75 to 4%, and the deposit facility rate went from 3% to 3.25%. So it went up by 25 basis points, the same like in the US. But it is as expected, so no 50 basis points, even if the European Union still has, the Eurozone still has a higher inflation than the US has. So normally we would have needed 50 basis points, but we have the same issues with the banks like you have in the US, and therefore, yeah, the European Central Bank is being cautious and not raising too fast, and this is what we see, the reaction here. Money is going back from euro into US dollar, and I'm profiting from this because I have a short position right now. Yeah, let's see gold. So gold GLD ETF is rising together with the gold futures, but I'm not expecting that this will happen or last for a long time in the future. Then we have yeah, orange juice still on my watch list. We tried to retest the lows, but there was no breakout back in the sideways trading phase, still on my watch list. And ES future for S&P 500. So we are at 4,100 points right now, but you see we already made lows today at 4,075 points. So just some more points here to retest the previous Fibonacci level and the previous low point here. It's showing more weakness, more signs of weakness than Nasdaq is, but this is because there are more banks in the S&P 500 than there are in Nasdaq, and the banks are, yeah, pulling the S&P 500 index to the downside here. Yeah, probably soon we will retest the 4,025 level and the 4,000. This is the target point where I believe the S&P 500 or the ES future can find a little bit of support here. So that's it. We have covered all interesting stocks and futures. If you have some more, just let me know and I can bring it up here to you. We are thinking of a slight run up before Apple earnings. Yes, Apple earnings are tonight. Let's talk about Apple earnings. So of course the earnings were good from the whole tech sector, so probably the Apple earnings will be good as well, especially because they managed to get with their production, or a big part of their production, to India now, from China to India. But like always, the outlook is the important thing. And normally Apple is not giving big outlooks, so yeah, we have to wait for the numbers to come and then see what the analysts are expecting. We see here earnings whisper number is expecting $1.47, and the consensus estimate is $1.44. Revenue of 92.9 billion. Let's see if we can see higher than expected numbers. This will bring up the Apple and for sure bring up Nasdaq, because if we look at the Nasdaq, oops, here I can show you Nasdaq companies, then we see that Apple is the second largest one in Nasdaq with a weight of 12.6%. So behind Microsoft, Apple is the second largest stock in Nasdaq, and therefore, of course, this will affect the index after the close with the earnings, and it can also bring the index more to its downside if the outlook is back. It will be really important what Apple will report today. So let's see the important numbers for all the Apple traders. I will bring up the Apple chart. I'm not trading Apple, but of course you can. Therefore, I will show the chart for you, the daily time frame here. So you see Apple is still strong, making higher highs, higher lows. It's still in an uptrend here, and yeah, looking pretty healthy, as you can see, even on a weekly time frame. But here we have a high point. Look at this weekly candle. What a nice sell-off from this wick here. So previous high point $176. So there would be still some room to the upside, but you see on a weekly time frame we are making lower high points. So this could be a lower high point if we close this week here lower. So it will be interesting how the earnings will come out and what the outlook will be, but we would still have some room to the upside if the numbers are better than expected and the outlook is good. If you want to trade it, then what are the important levels? Of course, the previous high point, $171 here, and the previous low point here, which was at $162.80. And if you want to get a Fibonacci level, so I'm using Fibonacci pretty often, so I would use this Fibonacci here from the previous low point from February. So then you will get some levels pretty near $164 and $160. So this one will be an important. You see there was a previous low point and there's a Fibonacci level, and the 50% retracement is also near a previous low point, $157. But you could also draw another Fibonacci level if you use the whole movement here from the high point to previous lows in January. Then you get even more levels, but you see the 160 will be important no matter what. There was a low point on a weekly time frame, and you have the round psychological 160, and you have two Fibonacci levels. So 160 would be my target if I would trade it to the downside. This could be a potential support here, and yeah, as well as the 147.50. You see there were over 4 consecutive weeks. This was an interesting low point here, and again it could act as a support, as a half of the profits from the January lows would be sold off here if we reach the $147.50 again. So yes, it will be important what Apple will report tonight. Okay, so I hope we covered the most things and you got some nice insights. Therefore, please give this stream a thumbs up, and if you haven't done so far, please subscribe to my channel. Let's just have a quick look for tomorrow if there is something interesting to to cover. Tomorrow we will have non-farm payrolls. Ah, yes, of course, this is important. Therefore, let's live stream tomorrow. Non-farm payrolls, 1 hour before the market is open. Prepare for this, and yeah, there will be major movements, especially with unemployment rate and non-farm payrolls. Okay, then let's meet tomorrow again. Thank you for watching. See you tomorrow. Goodbye.